Let us be completely honest with ourselves for a single moment, because the world is currently obsessing over maps, triangles, missile strikes, and escalating regional conflicts, while most people are completely missing the actual point of how global chaos impacts their own personal balance sheets. The raw reality of the situation is that complexity is a status signal for people who want to feel smart but stay poor. And if you cannot explain your entire financial survival strategy to a 12-year-old child, you are not actually investing. You are just gambling with your life savings while pretending to be a macroeconomic genius. Everyone wants to analyze the exact trajectory of a tactical ballistic system, or debate the precise defensive perimeter of a collapsing logistics hub, because it makes them feel like an elite geopolitical strategist. But when you look at their bank accounts, they have less than $10,000 in liquid cash, and they are one unexpected medical bill away from absolute financial ruin. I sit here on my balcony with a single cup of black coffee, watching people destroy their long-term wealth by panic trading every single time a new headline drops on their phones. They see a report about energy infrastructure getting hit, or a drone crossing a border, and their immediate instinct is to log into their brokerage accounts and completely restructure their entire portfolio. Based on sheer panic, they start buying volatile commodities or shorting specific defense stocks, or dumping their index funds because they genuinely believe they can outsmart a market that is priced in by multi-billion-dollar algorithms within 3 milliseconds of the news hitting the wires. You are not an institutional hedge fund manager with a direct fiber optic feed to the exchanges. You are a retail investor sitting on a couch, and your desperate need to react to every single piece of global noise is the exact reason why your net worth is completely stagnant. The truth is deeply uncomfortable and highly counterintuitive to the average person, because we are conditioned to believe that massive global problems require highly complex financial solutions. But the actual truth is that the only thing that saves you during periods of intense global instability is a completely flat, highly boring, and aggressively simple strategy that requires absolutely zero intellectual effort. On a daily basis, I am 27 years old. I have built a baseline of $150,000 in pure liquid assets, and I did it by being the most lazy, disciplined person you will ever meet in your life. I do not read corporate balance sheets for 8 hours a day. I do not draw technical analysis lines on stock charts like a child coloring in a book. And I certainly do not adjust my monthly asset allocation just because a foreign ministry issues a final warning to administrative centers. When the world starts moving into a state of total friction, the cost of everything goes up, supply chains break, energy grids face extreme pressure, and currencies begin to slowly lose their purchasing power through systemic inflation. Your natural human instinct is to do something aggressive, to change your position, to find a hidden loophole, or to buy some speculative asset that a random influencer told you would go to the moon during a war. But if you actually look at the historical data across every single major conflict and macroeconomic crisis over the past 100 years, the people who made the most money were not the active traders who tried to time the bottom or the top. The absolute winners were the people who locked themselves in a room, ignored the news entirely, and maintained a boring, predictable, automated contribution to low-cost broad market index funds every single month without failing. It is a strategy so incredibly dull that it makes people angry, because it completely strips away the illusion of control. It forces you to admit that you have absolutely no idea what is going to happen tomorrow, and humans absolutely hate admitting that they are powerless over the future. They would rather lose half their wealth trying to be a genius trader than double their wealth by being a patient idiot. Let us look at the current infrastructure situation. When energy assets get disrupted or shipping lines face direct threats in international ports, the immediate macro reaction is a spike in commodity prices, which translates directly to higher prices at your local grocery store and your local gas station. If you try to hedge against this by buying specific energy derivatives, you are competing against the largest oil conglomerates and state-owned banks on Earth, who know the infrastructure damage reports days before you even see a summary video on YouTube. You are bringing a plastic knife to a laser-guided missile fight instead of trying to trade the crisis. Your only real financial defense is to dramatically lower your own personal overhead, maximize your savings rate, and tunnel every single spare dollar into assets that automatically capture global productivity over a 20-year horizon. If global productivity completely stops forever, then your money is worthless anyway, and it does not matter what you invested in. But if humanity survives, the market will inevitably recover and continue its long-term upward trajectory, which means your only job is to survive the intermediate chaos without doing something incredibly stupid to your portfolio. People love to tell me that this approach is too simple, that the old rules do not apply anymore, and that we are entering a completely unprecedented era where you need a highly specialized basket of gold, digital assets, land, and short-term debt instruments just to stay afloat. That exact mindset is what I call the complexity trap, because the moment your financial life requires constant monitoring and adjustments, you have essentially created a second job for yourself that pays you an unstable wage while costing you your peace of mind. I value my total laziness far too much to spend my mornings looking at market tickers. I want my wealth to grow while I am staring at the ceiling or walking down the street, not while I am sweating over a leveraged option position that could expire worthless because of a single drone strike 6,000 miles away. Look at the people who are constantly talking about systemic collapse. They are usually trying to sell you a subscription to a survival newsletter or a highly expensive physical asset storage solution. They feed on your natural biological anxiety because fear is the absolute best marketing tool ever invented. When you are terrified, your critical thinking skills drop to zero, and you become highly susceptible to complex financial products that promise absolute safety but deliver nothing but massive management fees. The real flex is not having a portfolio that handles a specific geopolitical crisis perfectly. The real flex is having a portfolio that is so fundamentally robust and simple that it literally does not care who is winning or losing a specific battle on any given Tuesday. You achieve that by holding a large cash cushion to handle real-life emergencies so you never have to liquidate your investments at a loss, combined with a relentless automated accumulation of global equities that you promise yourself you will never touch for the next 15 years. That is the entire secret. There is no masterclass, there is no hidden algorithm, and there is no secret portfolio allocation that only the wealthy know about. It is just the sheer, brutal discipline of doing the exact same boring thing over and over again while the world around you screams that the sky is falling. If you cannot handle the boredom of watching your wealth grow at a predictable slow pace, then you will eventually suffer the excitement of losing it all in a spectacular fashion. So change your perspective, stop looking at the short-term tactical movements as a signal to gamble with your financial future, close your brokerage apps, turn off the breaking news notifications that are destroying your dopamine levels, set your investments to pure autopilot, and go find a nice place to sit outside and enjoy a coffee. Because the markets will do exactly what they are designed to do regardless of whether you are stressing over them or not, and your wealth will thank you for your absolute lack of effort. Let us dive even deeper into this collective hallucination that active participation equals financial success. Because when you look at the average person trying to navigate the financial ecosystem in 2026, you see a profound level of cognitive fatigue that is entirely self-inflicted. They wake up at 6 in the morning, open 5 different news applications, read contradictory statements from various global leaders, and then try to synthesize that chaotic information into a coherent investment thesis before the market opens. It is a completely comical exercise in futility because the macro variables are moving far too quickly for any individual human brain to process. Let alone monetize, the actual machinery of global finance is entirely detached from your emotional interpretation of the news. When a manufacturing facility or an industrial hub is compromised, the corporate entities that dominate the major stock indices do not simply roll over and die. They adapt. They reroute their logistics. They pass the increased costs directly down to the consumer, and they maintain their profit margins through sheer economic leverage by owning a broad slice of the entire corporate world through an index fund. You are automatically participating in that global adaptation mechanism without having to lift a single finger. You do not need to guess which specific defense contractor will win the next government supply contract, and you do not need to predict which shipping company will find a safer maritime route around a conflict zone. The aggregate market does all of that heavy lifting for you, yet retail traders persist in believing that their specific targeted choices will somehow yield superior results. It is nothing more than ego wrapped in financial jargon, a desperate desire to feel important in a world that feels increasingly out of control. If you examine the actual performance metrics of individuals who try to actively manage their portfolios during major geopolitical adjustments, the data is absolutely devastating. Over 90% of active retail traders underperform a basic buy and hold strategy over a 5-year period. And that number climbs even closer to 100% as the time horizon extends to 10 or 20 years. You are essentially paying a massive premium in the form of transaction fees, capital gains taxes, and emotional stress just to achieve a result that is statistically worse than doing absolutely nothing at all. Think about the sheer absurdity of that behavioral pattern. You are working harder, stressing more, losing sleep, and sacrificing your peace of mind specifically to earn less money than a person who is completely detached from the system. I look at my asset base of $150,000 and I realize that its greatest strength is not its size, but its absolute inertia. It is an investment portfolio that possesses no velocity, it does not move, it does not pivot, it does not rebalance based on sentiment, and it does not care about final warnings from foreign ministries. It sits there like a heavy, unmovable rock in the middle of a turbulent stream, absorbing the constant flow of capital that moves through the global economy. When the cost of living increases due to supply chain shocks, the companies contained within that index fund raise their prices, which causes their nominal revenue to increase, which ultimately drives the nominal value of the index higher over time. It is a built-in Automated hedge against the devaluation of currency that requires zero maintenance. Yet when you talk to the typical investor, they want to talk about complex option strategies, inverse exchange, traded funds, or exotic physical hedges located in overseas jurisdictions. They want to build a financial bunker because it satisfies their internal narrative of being a rugged individualist, surviving a systemic collapse. But a financial bunker is incredibly expensive to maintain, and it yields absolutely zero productive return while you wait for a doomsday scenario that may never actually manifest in the way you expect. The opportunity cost of holding non-productive assets out of sheer fear is the silent killer of generational wealth. While you are sitting on a massive pile of cash or unproductive physical commodities waiting for the ultimate economic reset, the global corporate structure is continuing to generate billions of dollars in daily cash flow, distributing dividends and compounding its intrinsic value at your direct expense. You are punishing your own future self because you cannot manage your current psychological anxiety. Let us address the argument that the year 2026 is fundamentally different from any historical period we have seen before. People love to claim that the old rules are completely dead, that globalization is reversing entirely, and that a passive investment strategy is a relic of a simpler time that will no longer function in a fragmented world. This argument completely ignores the fundamental nature of capitalism, which is an evolutionary system designed to extract efficiency from chaos. Even if the world fragments into competing economic blocks, corporate entities will still exist within those blocks. Assets will still need to be managed, goods will still need to be produced, and human beings will still need to consume products to survive. The underlying corporate units might change their geographic focus, but the concept of collective human productivity will remain fully intact. By owning the entire basket of productive enterprises, you are guaranteed to own the winners of whatever new economic paradigm emerges from the friction. You do not need to accurately predict the configuration of the new global order. You just need to ensure that you own a piece of it when it inevitably stabilizes. The real danger is not the geopolitical shift itself, but your internal compulsion to act during the transition. When you see dramatic videos of industrial facilities being compromised or strategic infrastructure facing total disruption, your brain interprets that as an immediate threat to your personal survival, which triggers a flight or fight response in your financial decision making. You feel an overwhelming pressure to sell everything, to hide in cash, or to bet heavily on a specific outcome that matches your current emotional state. That is precisely the moment when wealth is transferred from the impatient, terrified retail investor to the patient, unemotional institutional capital that is waiting to buy your high-quality assets at a massive discount. You are voluntarily bankrupting your future to soothe your present panic. I choose a completely different path, a path of radical financial laziness that is anchored in absolute reality. I accept that I am completely powerless over macro events. I accept that I have no special insight into global strategy, and I accept that the news cycle is specifically designed to maximize my anxiety for the benefit of media corporations. Once you fully embrace that vulnerability, the need for complexity completely evaporates. You stop checking the markets every hour, you stop caring about daily price fluctuations, and you stop treating your investment account like a high-stakes casino game. You simply set a recurring transfer from your primary income source directly into a global equity fund. Ensure you have enough liquid cash to survive a 12-month personal economic disruption, and then you completely detach your mind from the financial matrix. You spend your time focusing on things you can actually control, like increasing your primary earning capacity, minimizing your arbitrary consumer expenses, and enjoying the literal passing of time from a comfortable vantage point. Wealth is not measured by the complexity of your asset allocation, it is measured by the percentage of your day that you own completely. If you have a multi-million-dollar portfolio but you spend every waking hour worrying about currency fluctuations, supply disruptions, and international relations, you are not wealthy. You are just a highly compensated custodian of stress. True financial freedom is the ability to look at a catastrophic global headline, acknowledge its human weight, and then calmly take a sip of your coffee without ever feeling the urge to check your stock portfolio. Because you know with absolute certainty that your strategy is too boring to fail, too simple to disrupt, and entirely automated to survive the madness of the world without requiring a single moment of your precious attention. So let the strategists debate their lines on the map. Let the active traders exhaust themselves chasing the daily volatility, and let the anxious crowd throw their money into the latest complex financial traps. Your job is to remain completely still, completely lazy, and aggressively disciplined in your simplicity. Because when the dust finally settles on this era of friction, the people who stayed boring will be the only ones left with the capital to buy the future. And that is the absolute unvarnished truth of how wealth is actually preserved in a world that has lost its mind.